Okay, we'll start with the question of final accounts of a manufacturing concern. Just to revise, we have to prepare manufacturing account, trading account, profit and loss account, and balance sheet. First one, we will read the question. The trial balance of clause is as follows. Prepare final accounts for the year ending 31st of December 2023. We'll see one by one. First, in particulars, we see cash in hand. Where will it go? It's an asset. So we will make a marking and keep here. It will go to balance sheet, assets. Machinery, balance sheet, assets. Drawings, where do we record drawings? Where do we record drawings? That we will see. Where do we record drawings? Drawings is also written in the balance sheet. From capital, we do it less. Next, factory power and fuel. Clearly mentioned factory. So this we will put in factory. That is in the manufacturing. Anything related to the factory will go to manufacturing account. I'll write here manufacturing. Office salaries, office will go to P&L. Carriage outwards, outwards will always go to P&L. Manufacturing wages itself is saying it will go to manufacturing. Furniture and fixtures, asset, balance sheet, assets. Now we will talk about the opening a stock. Finished goods opening a stock will go where? Finished goods opening the stock has to be returned where? It is to be returned in the trading account. Then we have work in progress, manufacturing, raw material, manufacturing, carriage inwards will go to manufacturing. In RMC, we have to add. Next, we will see rent. It is given for factory 3/4. So 1/4 will go to P&L. This factory, it will go to manufacturing. 3/4. Sundry debtors, balance sheet, assets, advertisement, P&L. Printing and stationery, P&L. Factory insurance, factory, manufacturing. Purchase of raw material, raw materials consumed, manufacturing account. Balance at bank, balance sheet, assets. Discount allowed, we are allowing a discount. It's an expense, P&L. Miscellaneous expense, P&L. Now we will look at the credit side. Capital, balance sheet, liabilities. Sales, trading account, credit side. Reserve for doubtful debts. Reserve for doubtful debts. This is new RDD. Sorry, this is old RDD. Where is old RDD written? We have to write it in P&L. We have to list. We will see what to do of this. Then we have sundry creditors, balance sheet, liabilities. Now we will look at adjustments, closing stock. Finished goods, same what we have done here, that only we will do. Finished goods, we will write in trading. Second effect in balance sheet. Raw material, closing, manufacturing. Next effect in balance sheet. Work in progress also, manufacturing. Second effect in the balance sheet. Motor car was purchased and has been included in purchases. We will see later on what to do. Depreciation is very simple, like we do always, like that only will do. From balance sheet, machinery we will do less depreciation, 15% for motor car, 20%, furniture and fixtures 15%. That depreciation we have to write in P&L debit side. Provision for RDD should be maintained at 10% of debtors. This is new RDD. We have seen old RDD in the trial balance and new RDD we are seeing here. Important. Provision for unrealized rent in respect of the portion of the office sublet at rupees 120 per month from 1st of October 2022 has been made. Sorry, this is 23. Has been made. We will see later on what to do of this. We will start now with manufacturing account. First, we have cash in hand. It has to be written in the balance sheet. We'll come here and write here cash in hand. Outer column, we will write 1000. Next, we have machinery that we will write here. Machinery. We will write in the inner column amount of machinery, that is 30,000. $30,000 has to be written here because we have depreciation on this. Down we have seen depreciation. On machinery, we have depreciation of 15% per annum. Less depreciation at the rate 15% per annum. That we will see on 30,000, we will do 15%. $4,500. 30,000 less 4,500. How much is it? We'll see. 25,500. Now this depreciation we will write in P&L. We'll come to profit and loss account. We can mention here to depreciation. Below that, we have just found for machinery. What was the amount for machinery? 4,500. This is done. Now we'll look next one. Drawings. Drawings you will see later on. Factory power and fuel. Factory power and fuel. That has to be written in manufacturing account. We'll leave some space in manufacturing for raw material consumed and WIP. And then after leaving some lines, we will write here like 8 to 9 lines. We'll write here to factory, power and fuel. No adjustment. Outer column we can just write here. Amount of factory power and fuel 450. Office salaries will go to P&L. We will leave some lines over here. Office salaries 6,225. Then we will write to carriage outwards 500 outer column. Then we have to manufacturing accounts. We'll write in manufacturing account to manufacturing wages outer column 9,300. Then we have furniture and fixtures amount 3,400. On furniture and fixtures, we have depreciation and adjustments. Depreciation at the rate, depreciation at the rate, it was given again 15% per annum in adjustments. The question. We will find on 3,400 how much is 15% का depreciation? 510. We'll do minus 2,890. Depreciation we will write in P&L again. Here furniture and fixtures. Furniture and fixtures. Just now we have found out 510. Opening the stock of finished goods. Here we will write to opening the stock in the bracket we will write finished goods. To opening the stock of finished goods 4,000. Work in progress is to be written in the manufacturing account. To work in progress. In the bracket we will write opening outer column 7,250. Then we will write to raw materials consumed. In a column, opening raw material consumed is given here 2,800. We'll do one thing. We'll write opening below. Opening 2,800. Then we have carriage inwards We will see whether there is some any purchase of raw material given in the adjustments or anywhere in the trial balance. Here it is given purchase of raw material. Anything related to raw material will add or less here. Add purchases of raw material is given 82,950. We see here carriage inwards is given. So that also we will add. Carriage inwards 1000 is given here. Carriage inwards 1000. Now only one thing was remaining, that is closing stock. But if we scroll down in the adjustments, there was a statement which was saying there was a statement which was saying a motor car purchased on 1st of October 2000, that is 23, so sorry, 2023, for rupees 10,000 has been included in purchases. So this motor car which was purchased on 1st of October 2023 for rupees 10,000 has been included in purchases. So we have purchases of raw material. Now that motor car was purchased for rupees 10,000, that was by mistakenly included in purchases. So we will do here less. We will do it less. Motor car purchase. Motor car purchase 10,000. Second effect will be, we'll go to balance sheet and write here motor car just now we saw motor car was purchased for 10,000. On that we have to charge depreciation less. Depreciation at the rate, motor car's depreciation is given here 20% per annum. But if we see it was purchased on October and this year is ending on 31st of December. So for 3 months we have to calculate. So what we will do here is motor car value is 10,000 into 20%, and this is written, it was purchased on 1st of October 2023. So October, November, December, 3 divided by 12. We will write it over here as well. Into the bracket we will write motor car 10,000 into 20% per annum into 3 divided by 12. That will come to how much we will see. 10,000 into 15% into 3 divided by 12. Sorry, I'm so sorry. It is not 15%, it's 20%. Instead of 15, we'll make it 20. Amount is 500. So 10,000 minus 500 will give us sorry, 9,500. Now this depreciation also we will write in P&L. Motor car 500 depreciation. We can take a total of all these three. 5,510. This one small thing, this machinery depreciation. Machinery is used in factories. This depreciation, uh, ideally, we should write it in manufacturing account. We'll put it here. Machinery 4,500. Rest all is okay. Now we'll see next. Raw material is done. Carriage inward is done. Now we will look at rent. Rent is talking about factory. Okay, we're talking about factory. To factory rent. It is saying 3 by 4. Rest 1 by 4 will go to office. 3 by 4. So 4,000 will do 4,000 into 3 by 4. If we do the calculation, 4,000 into 3 by 4, we will get 3,000. Rest 1 by 4 will go to office. Will go to P&L, and we will write here to office rent. Bracket we will write 1 by 4. So out of 4,000, we have put it in factory, and remaining 1 by 4 will come here. That is 1,000. Then we have sundry debtors. We'll go to balance sheet. Here we will write sundry debtors in a column because there is an adjustment of doubtful debts. We will do less new RDD, which is given in the adjustments. We see here it is given provision. Fourth one, provision for RDD should be maintained at 10% of debtors. So we will write new RDD at the rate 10%. That is 2160. Now we will do less 19,440. So second effect of new RDD, what we will do is we will come to P&L and we will write here 2 provision for bad and doubtful debts. Provision for bad and doubtful debts. New RDD. What is the new RDD we just found? New RDD is 2160. Below we will write less old RDD. Old RDD which is mentioned in the trial balance credit side. This one, old RDD 560. So I'll write here 560 minus new RDD minus old RDD. Remaining is 1600. So sundry debtor is also done. Now we will go for advertisement. You'll write here to advertisement 775. Then to printing and stationery 1200. Then factory insurance will go to manufacturing and write here to factory insurance 1280. Purchase of raw material is done. We'll write balance at bank 8530. Then discount allowed to P&L. It's an expense for us. 610. Miscellaneous expenses 630. Now we will look in the trial balance at the credit side. We have first capital. Liability side. We will write here capital. Amount of capital 41,860. Then we have sales, which will go to trading account. Here, as usual, buy sales. Outer column 1,38,780. RDD we are done. Creditors again to the balance sheet. We'll leave some lines and write here. Somewhere over here. Creditors 8,800. I think trial balance is done. Now we will look at adjustments, whatever is pending. Adjustments are pending. Finished closing stock of finished goods. Where do we write finished goods in? Trading account. Opening stock of finished goods, here we will write buy. Closing the stock, bracket will put again finished goods. What is the closing the stock amount of finished goods? 6,500. Second effect will go to balance sheet. We will do one thing. First, we will make entries of raw material, WIP and finished goods. And then we will together put it in the balance sheet. Next, we have raw material. Raw material, we have to go to manufacturing. And here we will write less closing the stock, that is of raw material 750. Then we have WIP. We see we have written here to WIP opening. Closing will come on the credit side. By WIP, bracket we will write closing, outer column 4,750. So sorry, not here. 4,750. The second effects of this will go to balance sheet. We will write here. Closing the stock. What we saw here first, finished goods, amount 6,500. Next we saw raw material, 750. Then we saw WIP, 4,750. We'll take the total of this. Done. 12,000. First adjustment is done. Second one was already done. Car was purchased, which was mistakenly recorded in the raw material car purchase. So we are already done with that. Here we have less, and in balance sheet we went in, we wrote motor car for 10,000, and we have taken the depreciation for 3 months at the rate 20%. Depreciation done, motor car done, furniture and fixtures depreciation is done. Provision for RDD is also done, and the last one is remaining. Provision for unrealized rent in respect of portion of the office sublet at rupees 120 per month from 1st of October 2023 has to be made. There was some unrealized rent which we did not get. Office was being given on sublet to someone, and rent was 120 per month. That was from 1st of October. So October, November, December is the year ending for 3 months. So here how it will come now, 120 per month, that is for 3 months. So 120 into 3 months, straightforwardly. 120 into 3 months, the rent is being accrued and which is not yet received. So this is an income for us. It will go to balance sheet, asset side, and one will go to P&L, credit side. Assets and income. So this is not recorded. So this we will record. We'll go first to profit and loss account. And leaving one line, we will write here. By unrealized rent means rent accrued. By rent accrued, that is 360. Next effect we'll write in balance sheet that we have not yet received the rent. So we will write here rent accrued. Rent accrued. How much? 360. So I think all the adjustments are being done, except one thing was remaining, that was for drawings which we kept pending. These drawings we have kept pending. We will see. What we'll do is we will leave one line and write here drawings has to be less from the capital. We'll write here less drawings, amount is 2,500. We'll write in here. Rest all is done. Coming to the manufacturing account now, you'll see which side is more. Obviously it has a debit balance. 2,800, फिर add less. Here we will get an amount of rupees 76,000. Then we come downwards. We have all of this. Okay, now we can take a total. We'll take total of the debit side. Manufacturing account will always have a debit balance. 1,01,780. The same thing we will write it here on the credit side. So sorry, just mentioned 1,01,780. Now we will less this 4,750. 97,030. Here we will write where are we transferring it to the next account, that is the trading account. We will write here by trading account. Below that in the bracket we should mention cost of production transferred. Cost of production transferred. Now this we will take it to the trading account debit side. And we will write here to manufacturing account. Below that in the bracket we will write cost of production transferred as we mentioned there. What was the amount which we got there? Was 97,030. Now we will see, I think this time it will be credit balance. We'll take the total of credit. Yes, done. Same thing we will write here, 1,45,280. We will list both of this thing. Minus opening stock of finished goods minus this manufacturing. We'll get 44,250. Here we will write to gross profit, which will be transferred to the profit and loss of to gross profit carried down. Done. So now we will write here by gross profit brought down. What is the amount over here? 44,250. Now we will take total of the credit side of P&L. Sum 44,610. Similarly, I'll write here also. And I will minus all these things. $31,060. And we'll write here to net profit transferred to capital. This now we will transfer to the balance sheet. Capital account will write here. Add net profit. What was the net profit? 31,060. We'll add this, we'll less this. Add this net profit and we'll have to less drawings. 70,420. I will take total of liabilities and asset side. 79,220. Now for asset side also same. 79,220. So balance sheet has been tallied. So the sum is correct. Okay, done for the uh, day. I request everyone to please subscribe, share, and like the video. Thank you so much. We'll meet for next question. This question number 3.